Welcome back to Trade 360. I'm Diane King Hall. Time now for the big three. Today is 3 ETFs, 3 charts, and 3 trades. Rick Ducat will take us through the charts. And here to take us through the trades is Jason Brown, a founder of thebrownreport.com and author of 5-Year Millionaire. Okay, it's great to be with both of you. Jason, since we have you, I always like to start out with a big picture take on the market. We had an intraday record in the NASDAQ today, and there's this continued kind of grind higher. What's your thought?
I think, at all-time highs, I like that we keep chopping higher, but it's also a time to be cautious because you're chasing stocks that have ran up. You don't know how much further they can run. However, everything looks like it's in pretty good shape, but that's typically when the bottom falls out. So I think we got to be cautiously bullish. Cautiously bullish there. So beyond cautiously optimistic, cautiously bullish there. All right, Jason, your first pick today is XOK. That's that technology ETF. It's outperformed the S&P 500 so far this year. Yeah. What's your view on it now? So it's up 11.3% year to date. What I love about it is what I just talked about is that a lot of stocks are at all-time highs, and so sometimes as a trader or an investor, you can feel like you're chasing. And the big thing that's happening right now is earnings season. And so I don't really like to pick individual stocks going into earnings, but you still want to play around with the NVIDIAs, the Microsoft, the Broadcoms, the Palantirs, and then Apple, who hasn't participated. And the XLK is going to give you that basket of stocks to participate into the upside. So that's why I like it. So it's a wrapper. All right, we'll get into more details of your approach with it. Rick, your turn. You're up. Take us through what you've noticed about the patterns in this chart.
Yeah, so for XLK, we can see a shape that should be familiar to many of us who've been following the market overall during the past year or so. And what I mean by that is that we had a V-shaped dip here, culminating at the lows during the April tariff news announcement here. And then, like much of the rest of the tech sector, the XLK shot back upward here, eventually surpassing this old resistance ceiling that we saw here, our light green line. Very many times it was tested here. Before most recently, only a month or so ago, we broke above that level. Now, price has somewhat moderated in its trajectory. We can see we had a very steep trend line here, starting with those lows, our blue trend line. Then our white trend line is a more shallow slope. Price is contained for the most part within the boundaries of this channel here. Notice the very heavy volume during the lows that suggests heavy conviction on the part of traders, but also notice that for a little bit we had bearish divergence on the RSI. RSI was trending downward while price was making new higher closes, but it was more complicated than that because the RSI kept going into the overbought area, typically regarded as a sign of strength, and now the RSI reading is pushing back above that short-term red trend line there as it re-enters the overbought area, so potentially showing a further strength to come here. +2 standard deviation channel could be resistance near 263, a bit of volume here near about the 255 level, and then we have our nodes down here that match up with our previous ceiling near about 243 or so, so that would be another further support area to watch.
All right, 263, that stands out to me today. Jason, let's talk a little bit more then about your strategy and your approach here. You've got it on your list, but what's the plan? Well, first of all, I got to tell Rick, nice haircut. I can tell he got a haircut there, looking really good. My plan here is I see the stock from a technical analysis standpoint. It's actually also on the cup and handle, so it's moving up. It's trending above the 10-day moving average, and so I think you just want to ride that trend. You go out about a year. I'm looking at the January 18th, 2026 option, call options, 220 strike price. You're paying about $55 a contract. 276 is your break even. 16 points from where it's at right now. I think that's reasonable to ask for it to move between now and next year. And that's just a break even. If there's any time on that, obviously that option is going to be in the profit. Okay, all right, so that's the view and the approach there for XOK. So the next ETF on your list, and you mentioned that you're approaching it this way because we are in earnings season right now. So you've got SMH next on your list. It has also outperformed the S&P 500 so far. All about the semis here, it appears. What's your view on it now? So it's up 20% year to date, so it's super outperformed the S&P 500. I think when you look at what's going on in the semiconductor space, what the viewers got to understand is we're living through the exact same thing that happened when the internet was first born. And so you needed copper lines, you needed computers, you needed chips, and the same thing is happening right now with everyone deploying AI and large language models.
This is where the money is going, and you got to ask yourself, are we at the beginning or are we at the end of the AI revolution? And I believe we're at the beginning, so we haven't hit critical mass yet. And again, with us being at all-time highs as well as going into earnings season, I want to be careful not to pick individual stocks or chase the NVIDIAs higher. However, I want to play along with them and have some exposure, a broad-based exposure with a little bit of diversification. So that's why I like the SMH.
Okay, I think you make a great point though about like where are we in the cycle when it comes to AI and that kind of correlation to what we saw with the internet boom, and even when you overlay how the job market's been holding up, despite some concerns of potential weakness in the job market, the internet boom was a boon for the job market as well. So we may be seeing some of that happen in real time. All right, Rick, let's talk about the chart here. What do you notice about the patterns in this chart?
Sure, so closely related to the general technology sector, but more specific. So it makes sense that there's some similarities here, but there's also many key differences. So if we were to take a look at our price history here, we had another similar ceiling around this green line near about 263 or so. Then we had our V-shaped dip. You could also consider it like a cup and handle type shape, as Jason mentioned. Just kind of the general idea of a gradual bottoming, a finding of some sort of stability at low points, and then a resurgence here to eventually test and as the bulls would hope, overcome any prior resistance levels here. So we did hit a bit of a speed bump at our old highs near 263, but now price has pushed back to the upside here, just making new highs a few days ago. So we can see as well that the general trajectory here, a rising wedge type shape, typically regarded as a bit more of a bearish pattern here, but really it can go either way. What you'd be looking for would be a breakout beyond either of those two boundaries here. RSI, like our last chart, compressing in a triangular shape here, but still in the overbought area, so regarded as a sign of strength, as I said. So a mixed picture here. This could be the consolidated phase before another push to the upside. It could be before the break to the downside. We could just move sideways from here, but we're at the point where kind of the pattern is running out of space. So many traders would probably be looking for some form of breakout beyond either of those 2 points. If we were to keep moving further to the upside here, we can see our +3 channel, standard deviation channel, comes in near about 305, potential resistance there, and to the downside. As we said, our 263 level, our green line there, that's where volume starts to really pick up again below that point here. But in the shorter term, our +2 channel, our orange line here, right around 285.
Okay, it can go either way. That's what stands out to me about what Rick is saying now, Jason. All right, so Jason, then it can go either way, but what's your view on where it goes, and tell us more about your trade approach here?
So when I look at it long term, we got a cup and handle, and then we got a breakout above that resistance area, which is about 282. And so we're looking for it to potentially go higher. Again, are we at the beginning or the end of the AI revolution is the question, and I believe we're at the beginning. And so you had NVIDIA report earnings. They talked about how big of a blockbuster earnings it was without being able to ship to China. And so that just gives you a slight insight into the demand that's coming into the AI and the semiconductor space, which is why I believe long term, this industry still has room and legs to run. So that's my long-term thought on it.
So it's a call, longer-term play, and bullish.
Yeah, long-term calls, expiration. I want people to consider June 18th, 2026, the 260 strike price. It's still around $56, just like the XLK was around $50, so still in that same price range. But you're picking up specifically the semiconductors. You're looking at 316 for the break-even, which I think it can get there easily and go past that number. Okay,
last one on your list. We are moving away from the tech sector, but I feel like there's still something under the hood about it fueling this next one. XLI, that's the industrials ETF. So tell us your views on this one.
Yeah, and so, you know, like anything, you get a little bit of diversification by being in the ETF, but when you take the XLK and you take the SMH, you're still heavily involved in tech. I really like what's going on with the industrials. You have the big four, I like to call it, which is aerospace, transportation, construction, and defense. So those are the big four that you're going to see money pouring into. The 2021, I think it was the Infrastructure and the Jobs Act, that had billions that are still pouring into. And when you think about the massive need for power for AI, as well as for us to build out charging stations for EV vehicles, which is not going away, I think there's more money to pour into that sector. And then from a technical standpoint, Similar, all three of these are having that cup and handle pattern. They broke above their long-term resistance. This one resistance was about 145, popped above that, and I can see it continuing to go higher. You also have our geopolitical tensions. We're not going to outsource making our airplanes. So you have Boeing that's in that group. You have Caterpillar, you have Raytheon, you have GE, General Electric. Those are things that we're not going to outsource to China. We're not going to stop spending money on. And so I really see this as a defensive, if you will, sector from the tech sector.
Okay, all right, Rick, take us then through what you notice about the chart for XLI.
Sure, 145, that's the main area that stood out to me. Right about here, that marks those old highs. We had our V recovery once again here, or cup and handle, whatever you want to call it, the bottoming out and resurgence of the price activity that eventually pushed above the old highs. And we can see here that 145 was one of those areas, like I was trying to mention in our last segment here, not just saying, it can go up or down. It's more like this is the point where you might see a significant break up or break to the downside here, because when you have one of these repeated resistance ceilings, for example, it would a push above that level would trigger the cascade of all kinds of orders here that would propel prices further upward in the form of a breakout, would be the hopes of the bulls here, or it could be the point of a notable rejection. So 145 seems like one of those potential levels to watch out for. We can also see that if you were to draw a trend line going across the lows after we had this gap up, you could duplicate it, put it across those highs to give you this channel. That's about where price is now. So another potential resistance area right around where price is hitting 150 to 152 or so was that general topping point here. Bearish divergence once again on the RSI here, but not necessarily suggesting collapse, just suggesting the pace of the gains is starting to slow down here. So if we were to consider our other studies here, the heavy volume is really quite high on this chart, the 143, 144 level. That's where the bulk of the trading is in the recent term here in this name. So that could be a key area to watch just below that 145 level. To the upside, though, the +2 standard deviation channel comes in around 156. That's a snapshot of this moment in time as well. If price does continue to travel upward, it would adjust day by day.
Okay, all right. Thank you, Rick, for the deep dive in the chart there. Jason, final thoughts on your trade approach here?
Yeah, it's up year to date 14.5%, so that's double. The S&P 500 is up 7%. I like the June 18, 2026 150 strike price call. You're paying about $13 for that. 163 is the break even on that. And I think the trade ideally is that you're trading patience when you're going out, 300 plus days right now in some sectors that is bound to have more money coming to them, and it's not going away anytime soon.
All right. That's Jason Brown, the Brown Report, co-founder of the Brown Report and author of 5-Year Millionaire, and also our very own Rick Ducat, lead market technician here on Schwab Network. Thank you both. Coming up next, the Disruptors will cover CoreWeave, HSBC.